All right, let's dive in. Today, we're doing something a little different. We're not just looking at a stock. We're going to pull back the curtain and deconstruct the anatomy of a professional investment thesis. We're using a real equity research report on a company called Oceaneering International, or OII, and we're going to treat this as a masterclass in how to build a truly compelling case. Let's get started.
So this is the report's conclusion. Right up front, no beating around the bush. It's a bold, actionable statement. But here's the thing. A conclusion is only as strong as the evidence that backs it up. So for the rest of this breakdown, we're going to systematically walk through every single piece of that evidence exactly like a professional analyst would.
You know, every solid investment thesis, it doesn't matter if you're a seasoned pro or just starting out, it has to answer three fundamental questions. Think of this as the analyst's roadmap, the journey they take to get to a decision.
First up, the why. What is the core story here? What's the fundamental reason this company's set to grow? Second, the opportunity. Okay, so it's a great story, but is it a secret, or has the market already figured it out and priced it in? And finally, the win. What specific signal tells us that now is the moment to act? We're going to tackle each one of these pillars one by one.
Okay, let's get into that first pillar. We're going to start with the engine of any stock's long-term value, and that's its ability to grow earnings. This is the fundamental why that drives this entire thesis.
So the first question we have to ask is, what is OII doing so right that it even warrants this level of attention? Well, the answer lies in its earnings power. And when you see the data, it is pretty striking. Okay, now this chart tells a really powerful story. We've set the earnings per share, or EPS, for everyone to 100 at the start of the period, just to make it a fair comparison. Now look at that blue line, that's OII. It hasn't just gone up, it's completely detached. It's rocketing upwards while its entire sector, that green line, has basically gone flat. This massive outperformance, that's what analysts call alpha.
And this quote from the report it absolutely nails the key takeaway. OII isn't just riding a current, it has created its own wave. And the reason for this? The report says it's all about their specialized subsea robotics, a really high-margin business that sets them completely apart from the more plain vanilla oil field service companies. And there it is. That's our why.
So, we've got a fantastic growth story. That's great, but it's only half the battle. A great company can be a terrible investment if you pay too much for it. So next, we have to figure out if all this growth is available at a reasonable price. This is where we find the opportunity.
And this is where the story gets even more interesting. This chart shows the price-to-earnings ratio, basically how expensive the stock is. So get this, while OII's earnings were soaring, its valuation, that blue line, has stayed flat and cheap. I mean, way below its sector in the broader market. It's like the market hasn't even noticed that incredible decoupling we just saw.
You know, an analyst has a name for this exact situation. They call it a bullish divergence. It's that beautiful moment when a company's fundamental performance is getting stronger and stronger, but its stock is actually getting cheaper or just staying flat. This disconnect between the story and the price, that is the absolute definition of an investment opportunity.
All right, so we've established the why. We've got strong earnings. We've established the opportunity. It's got a cheap valuation. Now for the third and maybe the most practical pillar of them all. How does an analyst decide on the precise moment to buy? This is the when.
Now the report uses a proprietary tool it calls the momentum cascade. Don't let the fancy name intimidate you. The concept is actually really simple. It's just a disciplined way of looking at price trends over different time windows, short, medium, and long term, to make sure they're all pointing in the same direction and confirming each other.
Here's how it works. A bullish signal, that's the green light, happens when the short-term momentum, the 4-week trend, flips positive, which basically confirms that the longer-term uptrends are still healthy and they've got some fresh gas in the tank. On the flip side, a caution signal pops up when that short-term momentum stalls out, suggesting the stock might just be taking a breather. It's just a simple framework for disciplined entry.
So, we have the why, the opportunity, and the when. But before making a final call, any good analysis involves one last sanity check. You've got to look at other key data points to see if anything just doesn't add up or contradicts the whole story.
And this checklist gives us a really balanced picture. On the plus side, it gets a big pass on the Zacks rank. That's a system that grades stocks on earnings revisions, and it gets a #1 strong buy. That means analysts are all pretty much upgrading their estimates. Volume is also a pass, which means there's plenty of liquidity. But, and this is a big one, notice the caution flag on insider activity. The execs, they've been selling, not buying.
And this right here perfectly illustrates the core tension of this entire investment case.
The main reason to be bullish, the primary catalyst, is that you have this strong consensus among Wall Street analysts that earnings are going up. But the primary risk is the complete lack of confirmation from the people who know the company best, its own leadership. This is the kind of balanced, clear-eyed view that defines professional research.
Which leaves us with the final critical question. When you see powerful, overlooked growth on one side and a lack of conviction from insiders on the other, what do you actually have? Is this a rare opportunity that the market has completely missed? Or is it a classic value trap just waiting to spring on unsuspecting investors? The answer to that question really defines the entire risk and reward of this thesis.